Hello, this is John Piper with the weekend video clip, and it's Saturday the 4th of March. I thought I'd start with Bitcoin this morning. Bitcoin has shot up, as you may be aware, and this is the chart going back to 2012 when it could have been bought for I think less than $1. So we had this substantial one wave to a higher just below 1200, I think 1150, A, B, C, two wave, and now this third wave in progress with a bit of an explosion up from there. Now I got into Bitcoin at the end of 2017, around the 700 level I think, when I bought into BitClub Network, a mining company. That's all going very well. I'm very happy with the way it's going. People keep telling me it's a scam, but there's no real evidence of that as far as I can see, and there's evidence to the contrary. But I think in, well, world generally, it's sometimes hard to tell what's a scam, what isn't a scam. My colleague Graham got in around late 2015, so he did a particularly good entry point, and he's now up about, I've been 4 to 5 times on the Bitcoin value, and the mining shares are churning out the Bitcoin, so he's been doing extremely well also. However, I think what's important here is why is Bitcoin shooting up? I mean, you've got real investments like gold. I mean, someone was saying, well, Bitcoin is now worth as much as gold. Well, is it worth as much, or is it just priced higher? I mean, is there actually a worth here? And this is a big issue. Well, why are people pouring into Bitcoin when they can buy real shares, real houses, real gold, etc., etc., etc.? And I think the reason comes back to what's happening in the world, and this also explains why we have these zero interest rates. A little bit of something, a little bit of wine is always a good thing. Excessive amounts of wine is not a good thing. I think the same is true of debt. When I started out in the 1970s buying property, getting a mortgage was a great boon. I never thought that the excesses that have happened over the last 20-30 years would lead us to a point where we do have a destabilized situation in the world due to excessive amounts of debt. Now it's reasonable to think that if you're happy to pay for something when it's a good thing, so back in the 70s I was delighted to pay my mortgage payments. However, people are not so keen now. They realise this is a bit of a poisoned chalice. You get too much of it, you don't really want to pay for it. And this is why we've got negative interest rates, in my view, because people have realised, or the people who, the banks, etc., realise that debt is not such a good thing now. It's actually causing a lot of problems. And I think this situation, which is very worrying for the global economy in the first instance, is probably why we're seeing Bitcoin shoot up in this fashion. Because it is one investment, although I'm not sure investment is the right word, outside government control. I mean, the governments maybe will try and control it. At the moment it's probably too small for them to be too worried about. But there could come a time when it might be under some kind of control, and that might affect the price. But right now it's a sort of free market. And of course it's in what is obviously an uptrend at the moment. I mean, I think there might well be a pretty savage correction, although we did have a pretty savage correction here from around 1100 down to 750 or so, which I think lasted a couple of days, as I recall. Fairly sharp. So that may be out of the way. We may just keep on going at this point. People are saying 10,000. Well, I just don't know, but it's certainly interesting. I think more as to why it's happening rather than actually the unit itself. And that's interesting also. But we've now got an idea, which is doing so well, is I think fascinating. But whether it's something you want to invest in, I wouldn't be a buyer at these levels. Maybe I should be, but I wouldn't be. And I think it's an extremely interesting subject for research. All right, turning to the DAX, I showed a longer-term chart on Thursday. Basically, we have this 5 waves up to there. There are various different counts here. In fact, let me start again. Right, so we got a 1, 2, 3, 4, 5. That could have been a major peak, fifth of a fifth. Instead of which we've got an A, B, C. Doesn't count that well. The actual count is a little bit obscure. 1, 2, 3, but it's clear this is a 4th wave, or at least as long as this level around here holds. And with a 5th wave due, and then things could become quite interesting after one more rally. That is echoed on FTSE. Again, this is the 2-hour chart. So from the 7.2 low, 1, 2, 3, A, B, C. So another move by 7-4 will give us 5 waves. Quite how that fits in to the longer term pattern is a little bit obscure, but it all depends on what happens when we get there. We get a good sell signal, we can sell the market, then see how that move develops. Right, silver. I was talking about this triangle in Thursday's report. Basically, we actually broke down. I didn't actually sell that. I should have had a stop in place. I said we might retest the 200-day moving average around here, which we have done. We've actually broken right down below it, and now we're bouncing back up again. So that's the key. 1800 is the key level. So 18 is the key level. How do it happens? I think there is obviously a buy with a stop below there. So if you're keen on getting in, that's one area to buy. But it all depends what happens around here. And although currently this looks like a correction, down to there it looks like an ABC, A, B, C. Let me just clear that. So we've got a there, a B there, and then a C wave declined at there. Well, that can be kind of different ways, but right now that looks corrective. But we need to see the market get back above that. So that key level there. Alright, finally look at gold. We've had what I call the one wave, we've had this two wave, we then got this rally here, which failed last week on the 200-day moving average. Not looking so good here, however, if we actually look at the wave count here, 1, 2, 3, 4, you can count 5 waves up, although it could also be an ABC with that being the B wave. So it all depends how this develops. If we start keeping on down, then that will be rather worrying. A bit of a bounce, another fall maybe, 1200 holds. That would look pretty encouraging that this will continue. But it may be a little while before we see these markets rally again. So bear that in mind. But again, I'll be issuing. Obviously, I'll be updating you as we go forwards. I am thinking actually of issuing a number of different trading types. Extreme stop would be, say, type A. 5-minute bar type thing, type B maybe, crowd gap type trading for subscribers, and issuing a alert when I see that particular trading type. I just feel that may be more useful to traders, because what's important is that you develop your own systems, your own styles, and as part of the service that could be quite a useful adjunct. Anyway, more on that later. Hope you found the interesting and useful. Thanks for listening, have a great weekend, and bye for now.